Gotta focus. This has been quite an extraordinary week. We've covered a lot each and every day. We've been into it, learning. Today's session is going to be absolutely outstanding. Today's session is going to be absolutely outstanding as we get in here. Is it going to be Fire Friday? It certainly seems like it. Good morning, everybody. What's going on? This is Jordan with Conquer Trading and Investing. Wherever you are in the world right now or watching this on the replay, because that's still the present time, I am so glad that you are here. It is good that you are here. We are going to continue to make sure we stay laser focused on the bull of all bulls. Bitcoin during its bull market phase. We've been in it from the beginning. We've been each step of the way exactly on point with our situational awareness. And that's what we continue to do over here. Simplifying it down with our beautiful trend line. Right? Once it was breached to the downside, we added that in. It wound up being the support. You know, it could have went lower. These are just how we managed and set our risk. We're now back up into the resistance. Bitcoin's trading at $57,350. If during this episode, while we're going over our presentation, if at any point Bitcoin breaks out over here, just let me know in the comments so that we could just pull it up and see it's like, did you ever see the Facebook? Did you ever see the Facebook when Sean is like, they're getting their first 1 million users? He's like, pull it up on the screen, right? And then like tell me to pull it up on the screen if we're breaking out over there, because you know what? I put a lot of work in. There are certain moments, and one of those moments is gonna be as we break above $65,000, where you just get for a second to sit back and enjoy it. Right? That's nice. Why not? You put a lot of work in for a long time. Oh wait, Jordan, I don't want to put any work in. I don't want to put any work in. Just tell me if I should buy or sell. What? Yeah. Good luck. If I was a different person, I might be like, have fun staying poor. But there's not. Anyway, you all know my heart and how I feel about those that are in need, and we don't have to go there. We're not going to go there. This chart Brad sent over this morning to me. And I was just like, wow, that's insane. That might be the best Bitcoin model I've ever seen, right? Now listen, hear me out when I say that. First of all, look at these beautiful breakdown, retest, resumption out of the channel. Breakdown, retest, resumption, right? Are we going to get a breakdown, retest, resumption here? If that were happening here, would that be a clear sign something is different? Or are we going to hold the support over here halfway through cycle, right? Every indicator we have showing us on the 4-year cycle that we are currently halfway through the bull market. You heard me a few weeks ago telling you we're halfway, pointing it out, making sure that we're there each and every step and understanding why. Well, we'll watch. Price is the ultimate tell. We'll continuing following price and we'll find out what happens. Notice how in the other past 2 cycles, price actually peaks up. At the top of the channel resistance. What's really interesting is that the only time it gets above the medium, right, is when price breaks out. This is only, 35 days? He has 18 bars over here, 54 days, where in the 2013 bull market, basically Bitcoin made all of its gains. It had that double wave. This is the top of the double. Most people didn't, listen, Bitcoin was not even on my lips at the time, right? I was in the seminary, at that point, left the seminary, met my wife, moved to Mexico. I was not even I was not into Bitcoin whatsoever. 2013. I have no idea if I was holding Bitcoin, what I would have done. Probably would have sold much earlier than that vertical top. It's much easier now than it was 4 years ago in 2016, right? The summer of 2016, it felt very good over here. It felt right. I didn't have any idea of the 4-year cycle or anything like that whatsoever. I'm not going to listen. And anyway, I'm assuming most people were, anyway, I don't know what happened if they bought or sold or that weird tension we got into, but most of the gains are happening in a short period of time. Whether you look at the 2013 or the 2017 cycle, I've been setting you up since we reached the halfway point for what it takes to get you home. It's the double wave, the first wave that we were just at the bottom we are at the bottom of that first wave when I'm pointing it out to you. We have one wave, two, and then the parabolic move when most of the gains unfold. Could you use this model as a place to exit the Bitcoin bull market? No, way too late. You can't use a trend line break here to exit unless the model breaks, right? What I mean by that, though, is if you're looking at exiting as you break the bottom trend line support over there, exiting Bitcoin 9,300, obviously not. In the first cycle, you could see the severe difference from the cycle top to exit. That's why we look to exit at the cycle peak. That's why we watch price action. I think this is an amazing chart visually to view the cycle. And yes, it would be a very clear indication if something was wrong. If we broke down that over here, we'll look at that from a different view and a different perspective. This is, by the way, what we're setting up for the rocket ship, right? We're setting up for the rocket ship. Ian let me know that it was 34 bars in 2013, 35 bars in 2017. We know the place of the rocket ship. We've been setting this up. This is the bottom of the second wave incoming. And then look at that, around 35 days to that cycle peak. We'll be watching for it. That's what we're setting up for now, right? This is, by the way, remember Brad, speaking of Brad, right? Speaking of this beautiful chart work that Brad has presented us with us. I have to take all the credit though, right? Because Brad joined Conquering the Markets. I think it was like April 2020. It could have been earlier than that, February or March. And he had zero experience in the markets. He's since watched each and every episode or basically, So anyway, this was the channel we were following, and then when we broke down over here, remember that 58,500? That was the point. If you were still fully positioned, you were wrong, right? We had Brad's channel lining up to where my point was on the way I view my chart. Look at the breakdown, retest, right? If we resume down out of this channel, do you think that's bad? This is, by the way, the V. I've been talking about we're experiencing a V. We could experience a shakeout around this period. It happened in the first cycle, 2013 bull market. It happened in the second cycle, 2017 bull market. It could happen here. By the way, as price starts making the all-time high here, I'm fully positioned and more because the risk is to the upside. It didn't happen. It was a fake out. We broke the trend line. And then since then, we've been trying to repair, right? We look at the way that, let me just pull up my chart over here. We have this chart work helping us out, and then we have the repair. First repair, entry back in, second repair, and we're almost towards breaking out over here back into price discovery. This is the last trend line we have that is set up over here. I'm viewing it from multiple perspectives and views. Same thing, different, and all of you share wonderful work. All of you are sharing wonderful views at it each and every day on Twitter. It's getting better and better and better. CTM, I love it. Let me bring it back over to what I was looking at. By the way, and this is all that matters here, the line that I'm looking at when I say this is the last line, when I say that this is the last line into price discovery, look how Brad is presenting it, that blue line right there, a breakout above that last trend line. Yeah, of course, we all know that we have between 6,000 and 62,000 a little bit of resistance, but 65,000, we're right on time. This is a V, by the way. This is what I want to get into. This is a V. Some of you are like, whoa, that's no longer a V. This is not quick. We looked at going into it, by the way, that look on the way out, if we have perfect symmetry, it's going to take us X amount of days, right? That puts us at May 10th. I don't even know what today's date is. I think it's somewhere, it must be the 6th or 7th. We just celebrated Cinco de Mayo. It's the 7th, right? Friday, May 7th over here. So 3 days from now, by the way, Alan AU on Twitter pointing out to all of us that we do have options expiring today. Is that clearing the way here for one of those weekends where people are like, is the CME gap going to close? Is the CME gap going to, the CME gap has to close. I don't know. Hopefully we're having that conversation this weekend. If not, it looks like around Monday, if we break down outside of this channel, that's no longer a V, by the way, right? If we take out this low at 47,000, that's no longer a V. Something's changing. Something is different. And we need to be, at that point, you really need to make sure that you're seeing the market clearly, understand something I wanted to say constructive, but that's a positive connotation. Something is wrong, right? And then you could just refer to this channel over here. I'll tweet this out over here. This is Brad's chart, but it makes it really easy, right? Because it gives us some support lines to watch out for. Either which way, this is more important. This is focusing where we should be focused in on. I asked for help on the log charts when we looked at Patrick's angles, when we looked at Will's and my angles, and then we were looking at, I'm so sorry, is Adam's beautiful work that he shared with us, right? And we have Matt V sending over his work this morning as well. Listen, this is I love Brad's artwork. It's very clean. It's always been, right? Here's the look he's giving. It's close to mine and Will's. I'm sorry, it's much different over here. Here we have two different looks. This one over here is more resembling Patrick's and a very clean look at it. Very beautiful, giving us somewhere around a target of 55,000. You guys are like, Jordan, you've been following Bitcoin so long, your numbers are always off by a zero. Yeah, $550,000 Bitcoin September 21st, thereabouts. That's very much following Patrick's guidelines. We're going to look at what I think is the preferred model, Ted's model that he's done for us, a combination of what we've been working on. We'll look at that together, but this is nice to see. And these are two different models. I don't know which is correct, but I do think we're in that range. And it's let me just jump over to Ted's and the model that we use. By the way, there's the rocket ship. This is the battle plan right here. We're looking at right now the first wave. We're going to look and we're going to talk about the question on everyone's mind. Jordan, when is the model broken? For me, this is taking a long time. When is the model? We're going to be looking at that in a second. It's very clear. But I want to focus on what's more important instead of really focusing on again, did you see the tweet I put out there? A little bit of Eminem. You got one shot. Anyway, look over here. Look, the one wave, the two wave, the rocket ship. This is Ted's model showing the 2013 cycle over here in light blue, 2017 in darker blue. This is overlaying their past price behavior. If you don't see that, the 4-year cycle just continues to line up as you're looking at the 2013 cycle, the 2017 cycle, and this current 2021 cycle, I mean, listen, you're missing it. Jordan, you have to worry about valuation. Where's the money coming? No, I don't. I'm following the model. It's worked. It served me better than anything else. It's what I'll continue to do until it's broken, and if it breaks, by the way, it looks like it's going to break to the upside. When the Bitcoin model breaks, it looks like it's breaking to the upside for good. You got that, right? So it's a question of whether or not you think is 2021, are we having a super cycle that leads to further global adoption, or probably not? Do we have a bear market? Am I selling cycle peak? I'm watching the macro better than anyone out there, right? So, or do I think maybe in 2025 bull market, maybe there's a greater chance that the Bitcoin adoption catches on even further. By the way, when we look at Bitcoin adoption and we look at active wallets, if you want to focus in on what I would consider to be fundamentals for Bitcoin, right? Because it's not price to earnings, right? And you can see active averages back towards the 2017 bull market high. Is that a top? Is that a double top? Do you think that all of a sudden more and more people are going to stop learning about Bitcoin and saying, you know what? Maybe I should get some. Wait a second. Prices are rising all around me. What do I do? I have people this morning texting my wife, what's Jordan's channel? like traditional finance type people texting my wife this morning, and we're not talking anyway. That's what's happening. Let me bring it back and find out where we are. Let me bring it. This model gets me so excited, by the way. This is Ted's work over here, lining it up. Ian helped him work out off the all-time high, when price makes the all-time high. Using the halving, the 4-year cycle is all about the halving event, by the way. It is, let me pull up a chart. The 4-year cycle, and the 4-year cycle is the bull market phase, it's the bear market phase, and it's the accumulation phase. It's the halving event that sets all of this off. Every 4 years approximately, the miner's reward is cut in half, sending in a supply shock. And it sets off a bull market, right? We line up the bull market when price makes the new all-time high from the previous cycle, because during the bull market phase, it tends to give us the most symmetry. Everything is playing out within days. I mean, I'm talking about little waves, 30-day waves that seem to have the same type of peaks and drop. It's working. This is what we're setting up over here. Anyway, Ted's model, by the way, we have so much to cover. It's ridiculous. When I said this was going to be the most important session of the week, and if you've been here all week, it's been a good week. By the way, could you smash the like button and get me going over here? Look over here. This is the best model, I think, to focus in on, using the projection of the first cycle, 2013. It's coming in somewhere peaking around $750,000. Okay. The second cycle, by the way, 2017, peaking somewhere around $320,000. In between that range, that seems to be where we're headed second cycle. By the way, this current cycle is an average of the first two, right? Now, we're coming towards a place, and very soon, within the next couple of weeks, where all cycles should converge. All cycles should converge, over by May 15th, May 20th, somewhere around $65,000, $70,000. At that point, could you say, oh, we're seeing diminishing returns? With this cycle, we may see diminishing returns, and we may not have 18x. Maybe it's going to be lower, Jordan. Maybe we're going to hit 180,000, and we had 1/3 the return for each cycle. Listen, I'm telling you ahead of time. And by the way, it's going to happen again in July. All 3 cycles are going to converge around the same price. It may be lower than I was expecting, $100,000 by the end of June. That may or may not happen. It doesn't look like it's going to happen. It looks like it's going to be a month later, anyway, not important. What's important is we're going to also converge all 3 cycles. And then as we move into the blow off top, by the way, and you'll see it over here in this area, and you'll see it, and you're seeing it right now, price is going to be an average of the two. Here's a beautiful way to view that, and look at that. I'm going to jump around one second. I want to come to Ian's chart over here. Anyway, well, I'll get to it. I have so much to share with you. We have so much to cover and share about. Anyway, just so you know, it's my belief. I just want to get what I'm doing as I go over these charts with you each and every day. I'm continuing to work out my own thesis, my own heartbeat of the trade that I'm following, the one that I have concentrated my wealth into. Right? Do I want a diversified portfolio? No, I know where the trade is. This is where I'm focused. This is the focus it requires to get it right to the degree that we have gotten it right, and that I want to continue, not just for this bull market, the duration of the bull market phase, but also for the bear market, also for the accumulation phase, and also for the next 4 years. I mean, we're talking about building generational wealth for real. For real. This is your one shot. We'll get back to that later. It's my belief that we're going to be averaging between the 2 cycles. We're going to see it over here. We're going to see it over here, right? And when people start saying or questioning whether or not something's wrong this cycle, especially as all 3 converge, and they're saying we're looking at diminishing returns, just for the record, we could come back to this episode. We could watch. Not me. I'm letting you know it's going to be an average of the 2. That is my belief. All right. Let's keep going. Let's turn it back 1 second over here, right? I don't even know if we covered this or not. Jordan, it's got a lot of interaction. By the time I took a screenshot, this was 7 hours after published, 13 likes on a question like this. Jordan, I'm sorry, but I think some level of healthy skepticism is in order here. Jordan, at what point would you consider the model to be broken if Bitcoin never makes a new all-time high? This has to be the question on a lot of people's mind who are not believing that we're seeing a V shape and that it's quick. Again, let's revisit this in 30, 60, 90 days. We'll look back on it and we'll say, I was wrong. That was not a V and that was not quick. Or, yep, that was a V. That was quick. We'll look at the end. We have how much time it should take us. How much time it should take us to get to each particular point we're looking at. That's for the end. The other follow-up question to that was, good question. I'm wondering the same. It's getting a little scary. All models have to break at some time. I'm interested to know, what would it take for Jordan to consider the model broken? He mentioned 20 days since the shakeout low for the next all-time high. No, but if it still hasn't done it in 30 days, 40 days, 50 days, I mean, you got to call it broken at some point. Of course, Chase, of course. Let's take a look at that right now, right? And we're not going to use any type of fundamental on-chain data, because all on-chain data, by the way, if you want to look at, what's his name? Is it William Clemente, who's doing the on-chain data now? Follow him on Twitter. I retweeted one of his posts yesterday. If you want to look at every single, does Willy Woo do on-chain data? I think Willy Woo does on-chain data. You could search Willy Woo on-chain data. He has a website. I haven't seen it. But, if you want to focus in on the on-chain data, it's all extraordinarily bullish. It's all showing mid-cycle. So we're not going to consult the fundamentals. It's not what I do anyway. I mean, I consult them from afar. But what I do is I follow, I visualize things. And that's how I'm able to see trends. And that's how I analyze markets. It's off price alone. The pure price action trader, right? So anyway, yeah, of course, no one more focused on the macro. Nobody more focused on the macro overall, putting it all together and seeing that the heartbeat, the living organism of the financial markets itself, how they're all connected, how they work together, and always learning about it. A student of the market for over 20 years, living and breathing it, and continue to learn and learn and learn. But I'm there to learn what the market's there to teach me. If you're wondering when price needs to make a new all-time high by, let's take a look at it visually. By the way, let's first keep this real simple. In the first cycle, it was different. We had that double wave. Here's the first wave. Price, the model broke to the upside here. The model breaks to the upside, to the downside in March 2020. What was going on here? Price didn't recover, by the way, until after the rocket. This is the rocket ship. This is the rocket ship. Okay? This is cycle 2013 rocket ship, 2017 rocket ship, right? Price does not recover to a new all-time high until after the rocket ship. Could I say, and I'm not going to, but could I say, well, as long as by the end of August, we haven't made a new all-time high, the model's still valid? Well, of course, 100%. There's no question about that. But there was something else I wanted to share with you. So let me. This is, by the way, just another. This is Matt V's look at the log scale. You could see the resistance that we're into right now, by the way, coming from the symmetry that we see. This is nice work. This puts us somewhere around a target of, let's call it 325,000. Again, within that area. But I wanted to come back to this. I could say, yeah, the model's not broken. What most likely happens, though, what I believe is happening, we're seeing, by the way, that average. Ian, thank you for this chart. Ian, thank you so much for all the work you do for the interaction each and every day, keeping me in the loop. Absolutely. So lots of love. I'm going to have a cup of tea one day for all of the people over in the UK. One day we'll have a training session, UK time, and I'll be sipping tea, loving it. Not the matcha kind, by the way, not the matcha kind. So listen, let me fall back over here. This is, I could definitely say it would have to take until this time after the rocket ship. It could be until late August when price needs to make a new all-time high. The model's not broken until that happens. If you're looking about how long it needs to make a new all-time high, most likely what we see is something more along the lines of this. We're looking at the first wave. By the way, the first wave, we're looking to peak somewhere around the first week of June. That's when the peak of the last two cycles occurred. Not that it doesn't occur days before or after, right? And by the way, this is the setup. It occurs days after in the 2013 instance, right? I think around this time, price is making, at the latest, a new high of 65,000. I genuinely believe that, but I don't think that that's the case. I think that it's going to make it a lot sooner. A lot sooner. I think that what we've continued to set up is exactly what's playing out. Whether or not we looked at the 2017, it was 20 days since price made the low of the shakeout and then recovered. I don't think it takes 20 days. How many days are we into right now? We're currently, 13 days in, 12 days in, and it's following the same fractal. Do you watch what we're doing on Twitter? It's following the exact same fractal that it did in the 2017 shakeout on the way up over here, including on day 9 having a bear bar and then recover. It's the exact same fractal. It's 13 days. I mean, it's right on time. I'm not worried about it whatsoever. Now, again, we looked at where it could break down, what that would look like. By the way, if we're breaking down outside the support, that's bad news bears. That's not good. We will be watching for the retest. If the retest is a fake out, we get back into the channel, all's good. If we resume off that, that's the bear market's beginning. I don't know what's happening. I don't know. There's going to be plenty of people out there who are going to give me the why. After I'll know what's happening from price and I'll react because of price. And then everyone else could tell me why it happened. That's great, But in the near term, the other chart that we want, this is the chart, like breaking down outside this channel, which by the way, so far is a V. It's not instant, but we had 20 days last time. Before I pointed it out to you in advance to get you mentally prepared. And everyone's like, wait, we haven't made a new all-time high. The model's broken. Are you kidding? The model's been going on here for how many years? And anyway, let's look at this. This is another good example of where by May the 25th, we should have the both sides. This is off, by the way. Thank you for sharing this, for tagging me on Twitter. We got at Ethan Zolator. Thank you for doing that. This seems off to me. The second cycle doesn't seem centered correctly. Maybe I don't know what you're using here, the halving. Well, I don't know. Anyway, but you're using the last all-time high. And, rough guide, that's all we need. Cycles converging. It doesn't mean diminishing returns as it happens. Be careful. What I'm expecting to see is price in between the two. And especially if we see that occur here. I'm assuming it's going to occur here. That's my base case. That continues to be my base case. This is a look at, here you go. This is a good example visual. This is that first wave of the double wave in 2013. It took to the rocket ship for price to make a new all-time high. Yeah, almost 200 days, 197 days. If you look at, bring it again, the volatility here was much greater. Bitcoin was a different asset. It's definitely maturing, and this cycle is much more closely resembling the 2017, except that it's outperforming to date. And in about a week or so, we're going to be like, look, it's not outperforming. All three cycles had the same X from that particular spot. Yeah, I know. That's what's coming. But just call the model broken here, I don't see it. The model looks like it's playing out almost like carbon copy. Exact like. Here you can see at the exact time that pullback that occurs mid-cycle. This pullback happens to be roughly 3x from the last all-time high. It happened in each cycle. It's happening again, and price bases out over here before we see the first wave into the second wave into the blow off top. The only thing is that before we even pull back, I was pointing out, hey, listen, in the first two cycles we had a pullback here. I'm calling it a shakeout. It shook. Be careful. It happened. And now I'm like, all right, this is approximately how many days it takes to recover. And at that point, we're off to the races. It's the rip your face off move. It's a melt your face off move. It's like what we saw back in January, late December, January of this past year. It's coming quick. Here it comes, let's see what happens. It looks like it's playing out perfectly on time. I'm not looking at, like, the model looks clearer than ever, so I can't be looking at when it breaks. But if you're really concerned about when it breaks, I mean, this is Ian's beautiful work. We're dead center, exactly where we should be, right on time, headed towards this event in so soon. You know, we're talking a week from now. We're talking a week from now. So, by the way, Ted also pointing, you know what? Ted's pointing out from that shakeout period in 2013, a 1,600% return. From the 2016 shakeout period, a 9,000% return. I saw over here, Brandon, you know, talking about if you take on the based on the stock to flow normalized medium fair value for Bitcoin, it's currently under fair value. That happened this time in July 2017, exactly where we were in the shakeout, right? Bitcoin was trading at 1,800. It had a 5x in 5 months. Is that what we're looking at from here? A 5x putting us somewhere around $250,000? Or is this cycle outperforming a little bit? Are we looking a little bit higher, right? That's what we continue to put together and out there. I want to get into alt season in a second. There's more I want to talk about. So let me focus and refocus. Ian's work over here, giving me the projection, by the way. This is, you know, May 15th, cycles converging, somewhere around, you know, taking out that $65,000. That would have us right on time. It's a week away. It's a week away into is this the peak of the first wave? This is June the 21st, the peak of the first wave. I love the focus. I love the focus, right? It's a short time. We're talking, you know, a month from now, a little over 30 days from now. It's what we believe is going to be the cycle peak, not the cycle, the wave peak, the crest of the wave, right? Using past cycles, you know, it took 47 days from where we are right now, at the bottom of the pullback, to have 157% return, right? In the 2017 cycle, by the way, it took 56 days, almost 2 months from the bottom over there, and we had a 97% return. Are we going to have in 52 days, an average of the two? Are we going to have 125% return? That's on the thumbnail of this video. That's what you see, right? That's the average that we've been playing. The model has played out. This is how it's played out. This is how we're following it. I love the situational awareness keeping us in line and in track. Thank you, everyone. Thank you, everyone. Well, how far have we been talking here this morning? We have 1,800 people online, 36 minutes. Thank you for being here, everybody. We're just getting going, Tom. We're just getting going. But I need a sip of water. Excellent work, Jordy. Love it. Keep it coming. My family's money has had a crazy multiple since I began following you. All 4 daughters have Gemini accounts. The naysayers can move to the sidelines. Tom, it helps us solidify our case, right? It's beautiful. I mean, this is what I'm focused in on, by the way. This is my time preference. If I had to pick one chart that I wanted to look at, that I want on my wall, it's this chart over here. And it's so beautiful. And it's the 4-year cycle. Right? Yes, this is just a projection of what we're expecting this particular cycle. The pattern is the same. If you're looking for the model to be broken, I mean, here's the chart. You tell me when it's broken. And if you can't figure it out, you know, ask your 5-year-old. But the thing is that we're so hyper-focused. We know each move as it's unfolding, when the risk is to the upside, when it's not, you know. Anyway. Let's keep going. This was a beautiful chart shared. I have the Twitter name in 1 second for you as I get to the full chart. But I've been focusing this week, so this is as it's Friday, a great way to kind of recap it. I've been talking all week about what was going on past cycle, alt season, this particular time, showing Ethereum and Bitcoin and how it's playing out. These particular charts here on Ethereum and Bitcoin, and then together give us a real cool visualization of it. What we're looking at over here is right now, right? We keep going back. This is the pullback in 2016. This is the shakeout in July of 2017. I'm sorry, right? This is what's happening right here as price on Bitcoin is pulling. This is when Bitcoin, by the way, puts in the first wave, the second wave into the blow off top. This is as the parabolic move begins on Bitcoin. During this period over here, this is when Ethereum trades down versus Bitcoin. Right? You can see right here. This is that long 4 or 5 month stretch where Bitcoin is just really destroying it, right? Until you see that massive spike up, that 3-week period where alts blow off again. All right, so over here, what I'm trying to find out what the yellow is. Yesterday I had it lined up so well. Alt season 1, alt season 2. This is the area, by the way, where we are right now and prior to it, where alts are really running against Bitcoin, specifically Ethereum, and then all the rest. And that doesn't happen again until the peak of the bull market over here in this area after Bitcoin peaks, by the way. If you're using, and they're different, they're not lined up yet perfectly well. We're still seeing alts and Ethereum run versus Bitcoin. Bitcoin has not yet made it out of the breakout. As Bitcoin makes it out of the breakout out over here, if we see a quick recovery of 65,000, and then from 65,000 see a quick run towards 70, 75,000, at that point we might be seeing, exactly what happened, where Bitcoin now puts in its parabolic move, and maybe Ethereum goes sideways for a while. Maybe Ethereum, as it did last cycle, goes into a 4-month, the timing's different, consolidation period. That's what I'm always looking ahead. That's the event that I'm looking for and watching. I thought this is neat to be looking at a chart of Bitcoin and seeing where alts run against Bitcoin, seeing that it's actually after the cycle peak. Is this people positioning out of Bitcoin into alts? I don't know. I don't know anyone who did that. I don't know anyone who did that at the top of the 2017 bull market. Do you guys? Do you know anyone who was positioning out of Bitcoin December 2017 and into alt? I know people speculating like crazy in alts, But anyway, just a cool visual representation of it, of all the work that we did this past week, and a different way to view it. All right. Well, always my focus is bought back. Always, we could talk about that at the end. Always my focus, and that's why. This is it, George. Patience is key. Always I bring my focus. The only thing that I think each and every one of you should be focused in on right now, as we are coming out of the shakeout, a V is forming, right, is the next crest over here. The next crest, somewhere around the first week of June, should be peaking, right? And then we have 1 wave, 2 wave into the vertical blow off top. I always bring my focus back to this. I bring yours back to this. I'm watching over here Bitcoin in red, right? And then I'm watching Ethereum. I'm watching their price behavior. We've been focused in on that all week. I'm watching, as Bitcoin dominance is only 47%. And it seems to me that alts here, this is when they really put in a huge move. This move only lasted 2 weeks, by the way. A huge move. It was a blow off top of mid alt season. That's what it was. It was the blow off top of mid alt season occurring over here. Are we going to see something like that occur? If we see that occur, it's a good sign to me, in my opinion, that yes, you should, if you are playing the dance between alts and Bitcoin, it's time to for sure position out and into Bitcoin, right? Understanding what comes next, and that's when Bitcoin runs up into the end, up into sometime early September, late August, against everything else. Ian, keeping my focus. What else do we got over here? This is my focus. By the way, this is the map that we had going in as it was happening. As we were coming into the bottom, this was the map that we put out for ourselves. Understanding it took only 3 days for us to test that all-time high. That's not happening this time. It's different, but it's very similar. We're right over here, by the way, last cycle. We have about another week before the breakout. We're 13 days in, 20 days in last time. Are we going to break out a few days before? We're right on time. I don't think people should be asking at this point, how do you know when the model's broken? If that's your view, you have to acknowledge it. You have to have the question answered. It was answered early in this video, but you have to ask yourself why you're asking that question. Are you looking for the top in the stock market? Are you continually looking for the top in the stock market? Are you a contrarian? A contrarian view does not serve you well as an investor in the markets. Generally speaking, on a large time, stocks go up. Anyway, let's bring it back and play some HeadSnack here and get going. I'm about to drop them. Send it off over here. Right on time, Rustin. Right on time. Here's HeadSnack.
Conquer the markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing, just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room, grab the bull by the horns and to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
All right. Well, I love when we end on this one too. These look so delicious. We've seen, I'm so, my apologies, my brother. I forgot who shared this. I know exactly who shared it. The username is a little, not finding my tongue right now, but this is looking at, and he says he's going to redo this. This is not correct, but this was being shared in the channel on Discord that talks about the Big Short. You know, it talks about the bear market, how to play it. This is setting up the big spike. Here's a good visualization of it. This is setting up this big spike of alts versus Bitcoin over here. And this is looking at different percentages of different assets, whether we're talking about XRP, 1,500, Cardano, 1,400, right? I thought it was XRP 1,500. Cardano was a little less. That's a lot. You looked at other things, putting in like EOS, putting in a 1,300. That's what I'm looking for. I'm looking for this tradable event that's coming up. By the way, in order for this tradable event to play out, we do need to see Bitcoin, you know, go on to this particular phase over here where Bitcoin starts its wave 1, its wave 2, and it's the parabolic move. As I put out, you know, 10 days ago, the parabolic move is beginning as we were coming into the bottom of this V, right? This is me on April the 24th, April the 23rd, April the 22nd, and I'm like, the parabolic move's beginning. Everyone else is like, you know, Bitcoin's going down to whatever. Bitcoin's crashing, like lots of fear. And I'm like, the parabolic move's beginning. 55,000 Bitcoin, that's cheap, right? So anyway, I forgot where I was setting off. So sorry. The flow is just not finding me today. So sorry. But either which way, it is absolutely crucial what I believe I'm doing here for myself. I hope it is helpful for you. I lost the line of thought. So I'll go back to over here. I'm setting up for myself. Oh, it's got to be happening. What I mean by that is if we're seeing these things play out, I start seeing Bitcoin starting the parabolic move, wave 1 playing out, wave 2 playing out, and I see alts at this point no longer running but consolidating. Versus Bitcoin, they should be having their pushes against the dollar. Just like they should be continuing to have their pushes versus the dollar. But versus Bitcoin, and I see that setting up, that's going to say to me, I want to play this tradable event. The work that CTM is doing together, helping focus, looking at past assets in the last cycle to see which performed the most. Ethereum, by the way, it only had like a 250% gain versus Bitcoin. That's not where I want to focus. I'm looking here, if possible, in that 3-week period, if I could put up, you know, a 10x, you know, by the way, lightly leveraged, right? So, you know, what position of my overall portfolio would I use to speculate like that? We'll talk about that in a CTM session as it's being set up over here. If we could continue the work over here to figure out what assets we believe are going to be the leaders this time, right? If I were to point some out, I would have to say Cardano. Yes, that's something that I think that could be a leader. Would it be something like BNB? Yes, I think that's also a runner. I don't know. I haven't been following, you know, the DeFi leaders, you know, whether it's Aave, Uniswap, DOT. With those three, you know, would they be the ones that were having the higher percentage return versus Bitcoin during the peak of alt season? Possibly. I would love to work together, focus more, you know, working together as a team to be able to figure out what Alan, please get involved on this. Brandon, it would really be helpful to have a watch list of what we believe would be the best performing assets. And then people could decide whether or not for that alt season peak, they want to use like a diversified portfolio or they're just picking one asset and going all in. For me, it's probably going to be one. I don't have an idea of what that one would be. I think it might be BNB, honestly. But I would like That's not done from research. So I would like to get you guys involved, helping out over there. I was listening to Raul. This wasn't put up by Raul, it was someone else, Savvy Finance, and he was talking about Bitcoin price predictions and whatever. But listen, he mentions that like there's the possibility that Plan B's target of 288,000 is wrong, and that we trade higher than that. That we trade up to maybe 350, 500,000 or higher. Just listen, just in case you did not understand, if you follow the stock to flow, I don't follow the model itself. I follow the charts, and he's changed the model and the charts. So I don't like it like this. I liked it when it showed the colors and it was color coordinated to how many more months to the halving, right? Anyway, the model though, why it has a projected price target of 288,000, it's expected to overshoot. In each cycle, even the last one, 2000, it overshoots the model by a factor. I forgot what it was, but either which way. So if 288,000 is the price target or fair valuation for the stock to flow of Bitcoin at that particular time, it's expected to run higher. I wonder sometimes whether people are just lacking of understanding or disingenuous to kind of prove their own thesis. I'm not sure. This is a big deal over here, by the way. A couple of macro stuff that I just wanted to fly by with you. We're looking over here at the euro dollar market is betting on a Jackson Hole policy pivot. Where did you hear that, and who did you hear that first from? CTM all over what's going on in Jackson Hole, always looking ahead in this August and wondering what the Fed's going to do. You could see that they're talking about projecting by 2024, we're going to have 5 rate hikes. Do these hikes come slowly? Do they come quickly? Yes. By the way, they will probably hold off as long as possible. The market's going to force them at the end to start raising quickly. Are we going to see them talking about, they're already verbally intervening. We'll talk about that more in a second, right? Jobless claims, by the way, they came out this morning. I have no idea what they were. Obviously not something I'm focused on. Literally shocking data, right? I was wondering, they were talking about, we're going to have this huge print. It's going to be, I forgot the number. I really do. It's not really that important. It's a shocking miss. How are the markets reacting to the shocking miss? Markets are not really doing anything. Futures off a little. The futures were a little bit higher. Nasdaq was running a little bit higher, off a tiny bit over here. There it is, off a tiny bit. The dollar was weak on the. Look at that. The dollar could be possibly breaking down from our bull flag. Our bear flag. That's something to watch for. Since the markets are going to be closing in a few hours and don't trade 24 hours a day, 7 days a week, we're going to have to pick this up on Monday. This will be something that we focus in on a lot on Monday. Gold and silver, yeah, off their highs a little bit, but so is Bitcoin. Bitcoin is a little bit off its high. Anyway, that was new for me. I wanted to see what was going on as we see the big miss on payrolls and how the market's reacting. That's what I'm always more concerned to see is not what the number is, how the market reacts to the number, right? 266,000 jobs added instead of 1 million. There's no incentive. There's incentives not to get jobs right now. The government has made it so that people are actually incentivized not to get jobs. So what do they expect? Until those incentives are removed, obviously it's a problem. Have you tried getting a Lyft or an Uber? I mean, from what I understand, there's a long wait times. Bank of England, this is something to focus in on, right? First we had the Bank of Canada 3 weeks ago, tapering their QE. Now we're seeing the Bank of Canada also tapering their QE. Now there's a difference between tapering the QE and pulling back monetary supply, right? There's a difference between a taper that could break the market and just pulling off the gas. But we're seeing the Bank of England also now doing that. The question is, what's the Fed going to do? Because the Bank of England and the Bank of Canada are pulling back, does that force the Federal Reserve to pull? No, absolutely not. Federal Reserve is in the power seat, right? Bank of England, Bank of Canada, no, they're not, right? The Fed's going to do what the Fed thinks it's the best for its own interest and whatever its agenda is in. By the way, this is worth a headline. Russia is prepared to disconnect from the SWIFT system, trying to launch their peace. their payment system. Look, this is just de-dollarization. It's occurring. People wouldn't even acknowledge it a couple of years ago. You have to look forward, right? What type of role is the US dollar going to play in the current financial system? Wanted to pull up a chart of the DXY as I spoke about that, right? Are we seeing continued de-dollarization? And are we seeing things like the euro, right, taking up a larger portion of the worldwide transactions? Is the yuan, the digital yuan, going to wind up even taking a bigger portion of that, right? Nevertheless, it is signal over there when you see de-dollarization taking place. And then we have yesterday, the Dallas Fed president, Robert Kaplan, doubling down on his tapering comments. This is called verbal intervention. It's taking place. Verbal intervention is one of the Fed's greatest tools. Yellen, right? Yellen, who is, by the way, a former Fed insider, the former chair, is telling us that she believes that the Fed needs to raise rates. That's verbal intervention. You're seeing the Fed's Kaplan coming out and saying the Fed should taper. That's verbal intervention. That's what it's coordinated, right? As it's twice in a week. We've seen now the Dallas Fed president doing it. The economy is running hot, right? So this is absolutely a good time for the Fed to be verbally intervening. Right? We're seeing the Bank of England tapering QE, the Bank of Canada. It's coordinated. They all work together, right? I think that the Fed, by the way, it has two options what happens in Jackson Hole or even before that. The Fed might even signal as early as next meeting in June what it plans on doing in Jackson Hole if it really is going to be either tapering QE purchases or it's going to be looking possibly at it's going to be now considering raising rates. They're not going to go from we're not even talking about raising rates to raising rates, but they may say, okay, well, in the future, we will be talking about raising rates, therefore setting up that policy move in the future. They move a lot slower than you want them to move and that you move until they need to start moving. When I said at the very end, you'll see all those rate hikes occur. Once the market forces the Fed is always playing catch up. But the Fed knows that. It's not like the Fed doesn't understand this and or markets or the consequences of their actions. They definitely do. The question that we need to be looking at is what their agenda is. Understand their agenda is not your agenda. Your best interest is not in the Fed's agenda. It's to carry out whatever they're doing. I have no idea, right? But if you understand who the shareholders are of the private bank, the Federal Reserve, well, then you have a better understanding of what their agenda might be, right? Are they looking to raise rates and crash the economy, right? Could they do that before the digital dollar is ready? The digital dollar is not going to be ready till like 2022 or even 2023. They're doing this summer some beta programs, trying some test runs. They're working with people from MIT. And they're trying to move up their timeline. Is it possible by 2022 this is ready? Yes. Could the Fed crash the economy before that? I don't think so. Even if they were to raise rates tomorrow, it would take some time before the market crashed. They would have to raise rates not just once. They would have to raise it a period of times, and then it would have an effect. We would start seeing shortages of dollars again, problems in the repo market. This would be signs that something's wrong. Or is what the Fed looking to do? Are they actually looking to devalue the dollar rapidly? We're waiting for this breakdown of this bear flag. And if that happens and we take out the 88.40 low, we could be trading down in 2021 significantly. By the way, if that does occur, obviously bullish for the case of Bitcoin. Bitcoin's going to continue to do what it's doing regardless of what's going on outside of a liquidity crisis, right? So are they going to try to actually devalue the dollar quicker on purpose in order to force some type of Bretton Woods type monetary reset? Right now, Russia, trying to break away from the SWIFT, selling all their U.S. treasuries, buying gold, are slowly de-dollarizing. They like that. We're seeing commodity prices rising. They like that. And that's how they make all their money. Right now, they're in a position of power. They don't have to worry about the clock. right? They have the ball. They're slowly dribbling, setting up their next play. China, same thing. They're in no rush over here. The Fed's the one in the rush. The U.S. is the one in the rush because the U.S., why they still are in a position of power, and they are today in an extreme. They're in an extreme position of power, but we're looking ahead. We're doing the math, right? So they understand what's coming. Why they have the power, they want to have the monetary reset. You hear Janet Yellen, former Fed insider, now the U.S. Treasury Secretary, talking about the fact that, hey, listen, I remember when they were first doing the Bretton Woods monetary reset. I think it's time that we sit down and do this again. They want that, right? What are they going to have to force the sit down? I don't know. It's something to watch out for. I don't know. It's something. Do I think it's a risk right now for Bitcoin during its bull market phase over here to play out? I don't think so. Obviously, we have the June meeting in Fed. Obviously, in August, we have the Jackson Hole. We'll be watching both of those. Maybe at the end of this, maybe whatever happens in Jackson Hole and then the September meeting, maybe, by the way, market crashes, equity markets often happen September, October. Right now, though, May, sell in May, go away. We'll be back in September. That's when the action's going to happen, right? Not always, but it is a general rule of thumb. Is the Fed going to be blamed for the cycle peak? Let's see. How ironic, how funny would it be if we see the Federal Reserve blamed for popping the Bitcoin bull market and the crypto and the Fed walking away as the CME did with like this misperceived power. Like the CME had the power to crash the Bitcoin bull market last time. Like, have you not seen the cycle and the math? Come on. It's programmable money. Anyway, everyone, I think we covered what we need to cover. We got it all in today. We got it all in. Sorry about the flow. That's what's important. That signal right there, Thomas, though. Just the information itself all together, and that's it. So let's play some honeymoon vocals and see where the stream takes us next.
Expected to go up.
I did every week. Every time this week I did that. Here we go. This is it right here. Thank you so much to everyone. Keith, Brandon, Alan, all the moderators, Stefano, Pure Vita, everyone. Thank you so much for everything that you do. So grateful. Ian, Ted, thank you for your outstanding contribution. Chartworks, Brad sending the fire today. All of CTM each and every day working together to conquer the markets. It's absolutely beautiful. It's a dream come true. We have the best team. We have the best team. Yeah, look at this. This is important. You know, thanks, Gene. I will retweet the link for sure once someone tweets it. We're having Alan AU on Brandon's Crypto Trades and Tech. Brandon's Crypto Trades and Tech this weekend. That's a must watch for everyone. I'm looking forward to it. You guys are outstandingly great. 1,000 likes. We made it up to 1,000 likes. You know, the Joe flow, right? It wasn't as I wanted. I spent so much time preparing for the time we spent here together, and I've played it out in my head several times. So then when it's go time, if it doesn't flow out the way that I had it planned out, well, of course my expectations were different. But you know, either which way, we do what we do here because it gives me the greatest edge. That's for sure. What else? Greg, Gene, Giants, you know, everyone have a beautiful weekend. Thank you again for making this happen. Thank you to the moderators, the heart of all this. Everyone, have a beautiful day. Have a beautiful weekend. I'll see you all on Monday. May God bless you, and I'll talk to you soon. Elias, big shout out and big up. Oh yeah. Not only is it already covered, we're always looking ahead, but as we get there, I mean, that's what our training sessions give. I can't imagine being involved in the space and not being a part of CTM, all the training material, all the training classes, and the Discord. I cannot. There's a link below in the description below. If you're still here watching, probably it's for you. Thank you, Sheila. Thank you so much. Kimberly, have a beautiful weekend. Brad, thanks for all the beautiful chart work. I had to do it again. Everyone, have a beautiful day. I'll talk to you soon.